Hello, nice to meet you. This is Kim Ki-won from Richgo. I've heard that the medical clinic opening market is very hot these days, and as a result, there has been a surge in requests from directors. Today, we have a special guest among our tax specialists, our expert in medical clinics, tax specialist Kim In-hwa. Nice to meet you.
Nice to meet you.
Since there may be some people who are not familiar with our tax specialist Kim In-hwa, could you please introduce yourself briefly?
Nice to meet you. I am Kim In-hwa, a tax specialist representing the Gangnam branch of Tax Corporation BHL. I specialize in working with hospitals. I recently published a book called Tax Consultant User Manual, which is a tax-saving guide for directors who are opening a hospital or currently operating one. Since it is written in an essay style, it is now easy to understand and can be easily absorbed. Therefore, the response has been quite positive, and I would appreciate your love and support.
And now, I have a personal friendship with tax specialist Kim In-hwa, and he also provides tax consultations for our Richgo VIP membership in this room, which has received very positive feedback from our clients. He is very kind and excels in real estate, particularly in the medical clinic sector. Additionally, he is a personal investor in real estate, and he provides excellent tax advice in that area as well. Personally, I have a great deal of trust in him as a professional. I hear that many medical professionals are opening clinics these days. What is the current state of the medical clinic opening market?
These days, there is an increasing trend of opening new clinics. I realize that the system is getting better and better, for example, regarding loans, opening, consulting, and location analysis. The system for outsourcing tax-related matters is becoming increasingly effective, and information is shared among seniors and juniors on social media. Since there is encouragement like, I opened my clinic, and the market is good, you should open yours too, many directors are considering opening their clinics, and there is a growing trend of actual openings.
I see. So, there will be directors who are in the process of opening their clinics, as well as those who have already opened and are operating their hospitals. What kind of consultations do these individuals typically seek?
The consultation topics for directors who are preparing to open their clinics and those who are already operating their hospitals are somewhat different. For directors who are preparing to open or have already opened their clinics, there are many questions regarding loans, such as how to handle the interest, expenses that will arise from taking out a loan. They also inquire about how to draft interior design contracts, the payment methods for the interior, costs, and when to issue tax invoices. On the other hand, directors who have already opened their clinics are less concerned about these issues. Instead, they have a greater need for advice on income tax savings due to high tax liabilities, as well as consultations regarding employee issues and ways to reduce taxes through tax credits or exemptions. Additionally, those who have been in operation for about 7 to 10 years often express concerns about tax audits. Although they have not experienced a tax audit themselves, they hear from close acquaintances or colleagues that someone they know has undergone a tax audit. When it reaches 7 or 10 years, you should start to worry and prepare this kind of consultation. And for those who have been in practice for about 20 or 30 years, their children have grown up a lot. Then it concerns the children. There are many consultations regarding how to transfer property, whether through gifts or other means of transferring wealth. Therefore, there is a significant amount of consultation on inheritance and gift tax, as well as property tax.
In short, there are a wide variety of needs, depending on the procedures for opening a hospital and how much money can be made, as well as the age demographics. So, do you handle everything, from A to Z?
That's right.
Since you are a specialist in hospitals?
That's right. When I do a lot of accounting or consultations for hospitals, I end up analyzing things. Even if I don't intend to, analysis happens. Oh, really? What concerns do directors have in the first few years after opening? And then, as their children grow up, what worries do they face? After about 5 years, or even 7 or 8 years, especially for male directors, they start to wonder whether they should expand the hospital, or if it's better to maintain the current state.
Oh, I see. Should I go for it? Should I take the plunge and really expand? Or should I just play it safe and keep things steady?
The reason you are facing two concerns is that the amount of income tax you have to pay is so high. While there may be ways to save on taxes, it feels like, with such a large sum going out, you would rather use that money to invest more, perhaps to expand your hospital. I understand what you mean. Also, I have a junior colleague who has done really well, even better than I have.
I feel like I could do it too. But I notice that people tend to worry about these things for a moment. So, when we open a hospital, there must be specific tax points that directors should pay special attention to. What might those be?
One of the key points that directors need to pay attention to when opening their clinics is that the most common question they receive is related to loans. Since they are opening a hospital, very few people can do it solely with their own money, right? Almost no one. Therefore, consultations about loans come in, and an important point regarding loans is when to submit the business registration certificate. For this reason, I advise them to consult about how much the loan will be before applying for it. They should discuss with the loan officer when it would be best to start the business registration for the doctor loan. However, those who provide loans usually say that you need to take out the loan within 3 months, or plus or minus 3 months. In my case, when I take out a loan, interest payments start. So, it's important to maximize expense deductions to save on taxes. Therefore, I advise registering the business as soon as possible before taking out the loan. However, there is a business start date that needs to be considered. I recommend consulting with a loan expert to determine the best date for the business start date and then informing me of that decision.
So, when I take out a loan and pay interest on it, the purpose of this loan is to operate my business, which is a hospital. Therefore, all of the interest can be treated as an expense.
That's right. However, one thing to be cautious about is that if you register your business after taking out a loan, the expenses may not be deductible. This is a very important tip. The reason is that to start a business, you need capital. When you start a business with your own capital and take out a loan to create that capital for investment, the interest on that capital is not deductible as an expense. Therefore, before taking out a loan, you should submit your business registration certificate in advance, and the capital should already be established. After that, when you take out a loan and incur interest, that is considered interest, not capital. It is interest on the debt, and thus it can be treated as an expense.
If a business owner takes out a loan before officially starting the business, it becomes unclear whether the loan was taken for business purposes or not, which can lead to disputes regarding this matter.
So, during past tax audits, the key checkpoints were always when the loan was received and when the business registration was issued.
Certainly, while how you do the work is important, the order in which you do it seems to be really crucial from a tax perspective, right?
So, what this is, similar to is, to put it simply, it's like pulling down your pants. When you need to poop, you poop, and then pull down your pants. It's kind of like that.
Order is important. The feeling comes right away. So, when opening a hospital, these aspects are very important. And once I have opened the hospital, the revenue will steadily come in.
That's right.
At this point, many people might be interested in tax matters. So what are the key points to be aware of in managing hospital revenue?
There aren't many points to be careful about in managing hospital revenue. The reason is that these days, everyone uses cards. While there are some cash transactions, most people use cards. And since all income is exposed, they believe there is no need for significant management. However, an important point is the issuance of cash receipts. According to tax law, cash receipts are only required to be issued for transactions exceeding 100,000 won. Even if it is a business that is required to issue cash receipts, there are cases where cash receipts are not issued if the amount is less than 100,000 won. In my case, I believe that the key to managing sales is to formalize everything. Of course, any income from credit cards will be formalized, and I always advise that cash transactions should have cash receipts issued. This is because, in cases under 100,000 won, if a cash receipt is not issued, there can occasionally be incidents that occur. First of all, there is the issue of mismanagement. For example, cash has come in. So, if you don't issue a cash receipt and you have cash under 100,000 won, is this total accurate? Sometimes it is, and sometimes it isn't. For example, while working, a package arrives. I asked for cash from the delivery service. Then they handed me the cash. Later, when I do the accounting, I find that something doesn't add up.
Makes sense.
Yes, there are such things, and because of that, accidents sometimes happen in the Great Plains. Any financial incidents caused by employees, whether intentional or unintentional, can occur.
Since cash is right in front of me, it feels yes.
From the director's view, if they issue cash receipts precisely, it becomes really easy to manage.
That makes sense.
Yes, if you only pay attention to those things, there isn't much else to manage. And there are also receivables. Receivables. Yes. Is there anything like receivables in a hospital? That's right. Some people might think that there are individuals who don't even pay their hospital bills. But that is indeed the case. Is it possible? Yes. So, when consulting with the directors, there are some who ask, how do we handle accounts receivable? Whether they frequently visited, lived in the neighborhood, or were somewhat familiar with the director.
There are older people who sometimes say, I'll bring it tomorrow. But I've never thought like that. When I went to the hospital, I said, I'll pay you next time. But I've never done that in my life. Are there really people like that?
I am often surprised during consultations, but it turns out that there are quite a few patients in the orthopedic department and also in the pain management department. There are many elderly patients, including grandmothers and grandfathers, who come to these departments. You need to keep accurate records regarding such receivables. The receivable portion has already generated sales because the services have been provided, so sales have occurred. It's just that the payment has not been received yet. Therefore, it is essential to report the taxes accurately.
Next, I think that expense management is very important for income tax savings. However, not all expenses can be recognized just because they are spent. So, how can we ensure that these expenses are properly accounted for?
The key to expense processing is that two things must be accurate: qualified documentation and business relevance. Qualified documentation refers to four types: tax invoices, receipts, cash receipts, and credit card statements. When money is spent by the director or employees, they can use a card for expenses, such as dining out. For purchasing medical supplies or equipment, a bank transfer can be made while receiving a tax invoice. Up to this point, everything is fine, and then you should obtain the qualified documentation. So far, you are doing well. However, sometimes, while operating a hospital, there can be issues like water leaks or problems with railings that require repairs. The director usually doesn't handle these repairs personally, but calls in a contractor. From a tax consultant's perspective, it's important to obtain proper documentation. The director might thank the contractor for the repairs and request a tax invoice, but sometimes the contractor does not have a business registration certificate. Yes, this happens occasionally. A contractor might be well known in the neighborhood for fixing leaks, but only works as an individual without a business registration certificate, as they have another main job and only occasionally handle leak repairs. There are also cases where an interior contractor might say they are unable to provide one due to being in bad credit status. There are various scenarios like this. In such cases, directors often inquire whether they can process these expenses, since they cannot obtain valid documentation. The key points for expense processing are twofold: qualified evidence and relevance to business. Of course, there is relevance to the business. It's money spent for the hospital. Instead, the qualified proof, even if you can't receive, the money was spent in a way that is related to the business. Costs should be recognized. For now, they will be recognized, but since we couldn't obtain proof, there is a 2% additional tax for lack of documentation. The additional tax will be applied because money was actually spent, an event occurred, and there is a business relevance. What the director needs to do is to make a bank transfer to such individuals. After making the transfer, the director should keep a good record in their own name's bank account. Additionally, they need to receive a receipt for the payment made for the construction work, but often those individuals do not provide receipts properly. Therefore, you can also confirm by sending a message via KakaoTalk or text stating something like, "I sent the construction payment of amount on date."
That's right. Leaving some evidence in any form is helpful. Exactly. That's what receipts are for. And nowadays, in hospitals, there are many people who assist the director, right? Therefore, it seems that labor management relations are very important, and conflicts or issues like these often arise in hospitals. Therefore, I think drafting this employment contract is very important. Are there any points to be careful about when preparing an employment contract in a hospital?
The employment contract is very important, and when any disputes or issues arise between labor and management, you can call in a labor expert to resolve them. However, before that, when an employee comes into work, The basic thing is that the director must know how to handle it, and that is the employment contract. In any dispute, what is the first thing you should open and look at? The contract. The employment contract and labor contract are key points. From a tax perspective, it is essential to prepare the labor contract before the employee starts working, specifically on their first day. It should be done from the very first day. That's right, the Labour Standards Act stipulates that it must be written on the first day. While it is indeed written, from a tax perspective, the employment contract holds significance due to tax deductions such as the employment increase tax credit and the social insurance premium tax credit. Nowadays, these have been integrated and are referred to as the integrated employment tax credit. To receive such tax deductions, it is crucial that the employment contract is drafted without a specified term. In simple terms, since I will start working on September 1, 2024, I will be employed from September 1, 2024 until the end of August 2025. It is better not to set the final day of the deadline like this. Instead, since I don't know what kind of employee this is, I would like to observe for a month or two. In that case, you can just note down the processing period below. You can record it for a month or two like this, but from the director's perspective, any employee who comes in will work for about a week. At most, a week. At least 2 or 3 days.
Exactly, that's right. Since I now have quite a few employees, I feel like I can get a rough estimate after working together for just a couple of months. So usually for about 3 months, we just go through a probation period. And at that point, it comes down to one of 3 options. It's not great, it's uncertain, or it's good. However, I personally think it would be better not to work together if I have any doubts.
That's right. So, the key point regarding the employment contract is that it should be drafted on the day the employee starts work. And how should that employment contract be written? You can find a standard employment contract template on the internet. Just writing that is excellent. It contains all the essential, important, and necessary information, so you can download it and complete it. After that, I prepared the employment contract. So, you just need to prepare the employment contract. I will provide you with the template and you can proceed like this. The employment contract needs to be made in 2 copies, right? One for you and one for the employee. So, you should prepare 2 copies, one for yourself and one for the employee. However, since the director may not be very familiar with this, when you say, please prepare the employment contract, just hand 1 copy of the employment contract to the employee, tell them to fill it out and take it with them. It has no meaning, right? And then you have to draft an employment contract. Sometimes only one person drafts it and I don't provide support. There are cases like that.
So we need to draft it accurately, one for the director and then one for the support. Since all contracts are bilateral, we must definitely create 2 copies.
In a way, this may seem trivial, but surprisingly, many directors are not aware of it. There is an experience where only the employees know that this needs to be documented on the day they come to work. So, this can lead to issues later on, during the employee's probation period. This isn't right. I think we need to break up. When we break up, the employee leaves and then, just before leaving, they say to the director, I didn't sign the employment contract when I came to work, but I signed it right before leaving. There have been cases where they use this to threaten the director.
So, you can think of it this way. For example, when we make a real estate contract, there is a seller and a buyer, but we only write 1 contract. Isn't this the same thing, right? A contract is a civil law contract. So whenever you enter into a contract, whether it's with real estate or someone else, you must always write 2 copies and share them. Please keep this in mind. Is it okay if I don't sign the contract? You don't need to put your seal. You don't have to put your seal. Usually for real estate or important contracts, a seal is needed.
There are cases where this is done, but it is not necessary to go that far, according to the employment contract. Next, there are also some very good tax credits that directors can use to reduce their income. What are some of these tax credits that can lower income tax? In the case of hospitals, particularly in the dental sector, there are almost no tax credits or tax exemptions available. However, there have been some recent developments in this area. One of the things that started a few years ago is that the government began providing benefits for employee recruitment. This is precisely the Employment Increase Tax Credit and the Social Insurance Premium Tax Credit, which have recently been renamed to the Integrated Employment Tax Credit due to amendments in the tax law. That is the most significant and core issue, and it is a tax credit that can occur frequently. Additionally, for directors who are opening clinics outside of the metropolitan area, they tend to purchase medical equipment. When purchasing medical equipment, there is a tax credit called the Integrated Investment Tax Credit. So, how much tax benefit can you receive from this? This varies for each case. So, there are essentially two key points. The Integrated Tax Credit for Preservation and the Integrated Investment Tax Credit are the two key points to remember. Additionally, if your sales exceed 500 million won, you become subject to diligent reporting. In that case, there are deductions for monthly rent, medical expenses, and education expenses. However, directors rarely receive deductions for monthly rent or medical expenses. In the case of medical expense deductions, it refers to when parents living together incur high hospital bills, while they themselves are quite healthy because they manage their health well. Instead, as children grow up, education expenses arise. Then there are education expense deductions. If you are a diligent reporter, you can claim education expense deductions. This can be quite beneficial.
If the reported income exceeds 500 million won, there are special benefits associated with it.
That's right. Obligations arise, and there is also the duty to file diligently, along with the benefits that come with it.
Oh, you definitely need to take care of this. Now, when we invest in real estate, once the scale becomes significant, we tend to do it in a corporate form. Similarly, in the case of businesses, when my personal business starts generating substantial revenue, many opt to establish a corporation for tax-saving purposes. Recently, it seems that establishing a corporation has become quite popular among clinic directors. When we talk about a corporation in the context of a hospital, what kind of corporation are we referring to, and what benefits does it offer? Additionally, this is not a very straightforward topic, so it would be great if there were some specific lectures or resources available. What options do we have?
These days, directors are casually referring to MSOs as indirect bad corporations, and it's a current trend to create such corporations for tax-saving purposes or to utilize them. This reflects a trend not only in tax savings, but also in the operation of hospitals. It's a theme that can be pursued while scaling up. The establishment of a corporation, this is referred to as MSO, which stands for Management Service Organization. This term comes from the United States. So when it comes to MSO, the general public may not know much about it, but the directors are somewhat aware. When we talk about corporations, we mean forming medical corporations. It is complex, and getting approval of a medical corporation is not easy. So just because the directors are creating an MSO, it doesn't necessarily mean that it will help with tax savings, be beneficial, or not cause any problems. The hospital's revenue should be at least 3 billion won to have any significance, don't you think?
Should we establish that corporation if it exceeds 3 billion?
There is significance in it. There is meaning in tax savings and also in operations. This is because when you establish a corporation and run it, it requires energy.
There's energy to establish a corporation.
Energy is being invested, and now there will be increased scrutiny from the National Tax Service. So, it needs to be done accurately and without any issues. This is now my standard for judgment. If the revenue is less than 3 billion won, one might wonder if it's even necessary to establish a corporation, as it could just add unnecessary stress. That's why most hospitals I am currently managing, which have revenues slightly over 10 billion won, are often set up as return corporations, with some having been established and others not. For those exceeding 3 billion won, they are also set up as return corporations, and when creating an MSO, the question arises on how to utilize it. For example, hospitals need to engage in marketing. They could completely outsource it, but they can also manage it through a return corporation. Additionally, when actively marketing on platforms like YouTube or Instagram, they can hire marketing experts suited for those specific needs. But if the hospital itself hires and creates a space in some corner of the hospital, it's not necessarily bad, but the atmosphere feels a bit strange. That's right. There are those concerns, and then if the director feels that the appearance is not quite right, they might wonder if there are other options. For instance, if the director's spouse is interested in marketing, they might want to try their hand at it. In that case, they could establish a corporation and channel all marketing for their hospital through that corporation, effectively conducting marketing activities there. After the corporation started doing some marketing, they gained confidence. Eventually, there are corporations that have completely transformed into marketing companies by also providing services for other hospitals, including those of their siblings. There are such cases, and one of the tax-saving strategies could also be a goal for the directors. Some directors, especially those with considerable experience, have the goal of operating their own hospital in their own building. That's right. So there was actually a case where a director wanted to sell the second floor as a separate unit, and they expressed interest in buying it. They asked me if it would be okay to buy the second floor and use it for their own hospital. I explained that if they purchased it under their name, they wouldn't be able to charge themselves rent, which means they wouldn't be able to deduct expenses properly. Consequently, the tax burden would actually increase because they would end up paying more tax than the rent amount. I suggested that it would be better to establish a corporation, acquire the hospital through the corporation, and then have the corporation lease the building to the director. Then you would have to pay monthly rent to that corporation. So, looking at it positively, there is an effect of income being distributed, and the monthly rent paid by the director can be treated as an expense, achieving a twofold benefit. And they included their children in the shareholder structure of the corporation. It's legal. However, the value of that real estate has increased. As a result, that added value is naturally transferred to the children.
So, now we can also reduce inheritance tax and gift tax, which brings about various very positive effects.
That's right. There is a way to catch two birds with one stone by simultaneously achieving tax savings for the hospital and transferring wealth.
Well, since we are filming now, we can't really go into very detailed discussions about these topics, and individual cases vary greatly. So, in a way, I should provide some specific lectures on this. Are you also conducting such lectures?
Yes, I am also giving lectures. Recently, I have opened new lectures to prepare and provide you with a lot of information and knowledge.
So, is there a special reason why we need to provide various tax-saving lectures specifically for hospital directors?
When I first thought about this lecture, I pondered whether it was necessary or not. At some point, I decided that I must create this lecture to share knowledge. However, this is not about delivering specialized knowledge. It is about the basic knowledge that directors who are planning to open their clinics or those who are operating hospitals should naturally know. By understanding this basic knowledge, they can eliminate their fears regarding taxes as well as their apprehensions about tax audits. Additionally, they will be able to anticipate changes in their future income and the associated tax implications. Furthermore, when they encounter issues or have questions, they should feel comfortable asking their tax advisor or representative. You need to know something in order to ask questions. Even having basic knowledge makes it easy to ask questions, but there have been quite a few instances where people couldn't ask because they didn't know. So I thought that if the directors understand this much, they would be able to easily comprehend the explanations I provide about tax processing and feel comfortable asking any questions they have. If that happens, I believe it could eliminate their fears regarding tax audits and personal income tax, as well as all other fears. That's why I decided to establish this lecture.
If you listen to this lecture, you will likely gain confidence. There is a director of a dermatology clinic near my office in the COEX area who has been running a large practice for quite some time, and I see that everything mentioned by our expert Kim In-hwa is relevant to his situation. He often expresses regret about having to pay a significant monthly rent, saying, "If I had known, I should have just bought this place." Additionally, he has faced tax audits and has had to pay a considerable amount in taxes. This highlights the importance of managing income tax from the moment you plan to open a clinic, and as revenue starts to come in. As assets grow, questions arise about how to scale the clinic and save on taxes. This education is essential for understanding the tax implications throughout the life cycle of a medical practice. Directors who are preparing to open their clinics will find this information incredibly helpful. Lastly, where can one find such information? Just broadcasting here?
If you just leave without doing anything, you won't know. Where can I find a pinned comment or something like that? Ah, yes. Then, when the video comes out, I will introduce it through a pinned comment link, and I would appreciate your interest. By attending this lecture, the directors will truly gain confidence. This is because I have conducted small, seminar-style sessions specifically for directors, and the fear has been removed. Moreover, tax matters seem difficult, scary, and not within my realm. I thought the tax specialist would handle everything for me, but it turns out it's not that complicated. It turns out it's really simple. Once you acquire some basic knowledge, you feel like you have a master key in your hand.
I can feel the confidence in our tax specialist's words. I think it would be great if the directors of our hospitals and clinics show a lot of interest. Today, we are joined by our tax specialist, Kim Yuna. Thank you. The checklist for Investment Check 2.0 has been updated, so you can enter the coupon for that. Additionally, as we are entering an era of auctions, we have made it possible for you to experience auctions for free. You can enter Giwon auction for that. Now, how do you register the coupon? If you go here, you will find My on the homepage of Richgo. If you go to the Richgo home, you will see My there. I will turn on Richgo and explain it a bit. Is this event only happening for a month? Now, if you go to the Richgo homepage, it looks similar on both PC and the app. Here, you will see a section for your profile. Click on the profile and then it will appear. From there, you can enter auction product coupons or membership coupon codes. You can input the coupon codes for Giwon check and investment check as well as Giwon option for the auction experience. I will also include this information in a pinned comment, so please give it a try. It will be a great help in your real estate decision making.